This is a City AM Studios production.
Hello and welcome back to Business as Usual, brought to you by Okta, with me, Martin Timber.
And me, Matt Kenyon. Coming up, Europe's second biggest digital bank looks set to take the fight to Revolut with a bid for a UK banking licence.
Sir Jeremy Hunt tells City AM the triple lock on the state pension isn't fair on future generations. We will hear from the former Chancellor.
And Martin Sorrell, who set up the advertising giant WPP, tells City AM that the firm is, and I quote, now catatonic. Now, I'm sure that you all have that Friday feeling today, but it is just another weekday in the square mile. So, to help us decode the business news of today, our senior city reporter, Sam Norman, has come storming into the studio.
I like that.
Well, thank you. Welcome, Sam. How are you doing?
I'm good. Good to be here again, guys.
Well, it's a pleasure to have you back.
How's the hangover?
It's good. It's a gentle Thursday.
Gentle hangover, yeah.
Nice. Well, first of all, an exclusive from you, a very good exclusive, and it's from the world of fintech, which is your first love,
Of course.
and your darling. So it's about Bunk. Bunk might not be necessarily a huge household name in the UK in the way that maybe Monzo is, but it is nipping at the heels of Revolut. It's the second biggest digital bank in Europe, and now it looks like they're angling for a coveted UK banking license.
Yeah, so Bunk is an interesting one. So they did used to be in the UK prior to Brexit. They operated under a...
So they were very early.
Yeah.
2014, 15.
European banking license, though. So this was obviously pre-Brexit. And then, obviously, you think Brexit, you think 2016, but it's actually, obviously, 2020. That was when they exited UK after the full regulation change. And they basically said the red tape of it all was just too much. Took a step back. And they've slowly been plotting this comeback over the last couple of years.
So there were businesses that had banking licenses sort of via the EU that then stopped applying to the UK, and they thought...
So they could just operate in the UK through the European banking license, and then Brexit kind of changed that. So they took a step back, kind of built themselves up in Europe. I mean, they've got around 20 million users, and that's in just under a decade. So they're very impressive. They're a Dutch fintech, very impressive European presence. And this is something I've been hearing for a while about this comeback to the UK. I mean, they applied for a EMI, which is like a softer banking license permit with the FCA in 2024, but obviously the full fat UK banking license, it's like the coveted permit that these firms want.
We're quite, in the UK, we're quite focused on our own homegrown fintechs. I mean, the last big challenge I remember being like as a European neobank trying to make an entry into here was probably N26, and they don't really operate here anymore. So, I mean, do you think there are particular challenges being a European fintech trying to enter this market?
Of course, and it's no surprise. Like we saw data, I think it was early this year, that came out. Well, yeah, it came out this year. Last year, there was 0 banking license applications to the UK. That's foreign firms. That's firms in this country. Now, is that because it's a competitive market? Is it because it's oversaturated?
Surely it's a crowded field. I mean, you were in the studio not long ago talking to us about Starling.
Yeah.
Also finding the field quite crowded.
Yeah, and they've been there for 10 years
exactly.
now. Like they were one of
these
the first
sort of
entrants.
firms, and like the Monzos, Revoluts, Starlings, and all the ones that have cropped up since, your Zopas, their benchmark is like their customer acquisition numbers, and there's only so much they can do when there's so many of them.
Is it all they can do just like subscriptions and we'll pay you a higher interest rate?
Well, this is what the thing, you have to go to the diversification, and you look at like a monster like Revolut, who's diversified its revenue streams so much to the subscriptions, to the crypto, to the trading, to the lifestyle reach, like mobile plans. Like this is the next path for them, and we're kind of entering that territory of like super apps as opposed to just fintech digital banks now.
And do you think that will work? Do you think people are actually in the UK open to a financial super app?
Absolutely. I mean, look at Revolut. Like people want that all-in-one cohesion. I think. I think there's a different relationship you've got. I mean, Monzo is almost like following a similar route with the super app to it.
They acquired like Habito for mortgages. So they have got a genuinely huge stream of.
I mean, obviously, they're a lot more UK focused. Revolut is that like global presence, but I think the diversification is kind of the not only the business angle, but it's also the consumer angle. How you can cater to them with like a bit of a USP. If there's so many digital banks, you've got to offer something to all the other digital banks are now.
Can you imagine getting a mortgage on Monzo?
You think it's crazy, but like
it would feel quite wrong psychologically just doing it on your phone.
Yes.
that's what they want. They want it to be that convenient.
There are two things I do on a computer: book holidays and get mortgages.
Yeah.
Don't do them on my phone.
So I'd ideally do that face to face when the time comes.
Yeah. But we'll also see. I mean, obviously, Bunk wants to be in that field. We'll see. Like I said, no formal application has been made yet, but it's something we've been hearing for a while, and now I feel comfortable to make the move with it. But yeah, it's definitely something we're laying the groundwork for. It's a crowded field, so best of luck to them.
Right, now, in some legal news, Sam, and a bit of a 2018 throwback, Lex Greensill was, of course, closely associated with David Cameron, and there was that whole big scandal. But there is new Lex Greensill news.
It absolutely is. So we found out today the UK Insolvency Service has confirmed that he has been banned from serving as a company director for 9 years. I believe the maximum of this sentence, what we were looking at beforehand, was maybe up to 15. So it's a little bit undershot of where, but I mean, 9 years is still a long time. Now, I think it's important to remember there's two kind of separate cases going on for Lex Greenhill. There's this one, which is with the Insolvency Service, which obviously resulted in him being banned as a company director for 9 years. But there's also, he's got a separate case with the Department for Business and Trade, and I think that's over unlawful disclosure of private information. So it's not quite the end, but it's definitely an interesting step and kind of dictating where his future is going to be in UK.
Interesting. Well, we'll stay across that one, and I'm sure our legal reporter and our professional services editor will be across that one pretty comprehensively. One more thing, Sam. For the distributors of the Take That film from a few years ago, it might not be the greatest day.
It's the shine has surely gone off.
Very good.
Listen, I mean,
It's almost like we workshop these.
We spend hours.
I
on
spent
these.
hours listening to Take That today just purely out of inspiration for wanting to write a story like this. But yes, I found out in the last 24 hours. So it's a London-based film distributor that's part of the wider group, but it's the distribution arm, separate company to the wider group, has gone bust. It's going to liquidation. I think it's FRP Advisor that's been brought in. And it's basically just another story of mounting industry pressures. Now, it's quite a unique one, I think, in the distribution for the films. They're facing a lot of pressures from the balance between what cinemas take versus what the distribution arms can take from the release of a film is quite skewed in the UK. Just something I've been researching into when I found this out. The founder of this company, it was something he'd actually gone on record complaining about before. It's quite a unique case in the UK where it is a bit more skewed to the cinemas as opposed to the distributors in terms of a revenue
That's
stream.
very much not the case in the US at the moment, where the streamers seem to have a bit of a chokehold on that. And
Can you just explain, like, we're 5 years old, what's the difference between cinemas and distributors? Like,
So the
what are they?
distributors, they're responsible for the rollout, the marketing. So obviously this distributor, Elysian Film Group Distribution, Film Group is the wider group. They were responsible, so with Greatest Days to Take That film, they were responsible for the rollout, the marketing, getting it into cinemas, getting it booked. This is, the cinemas are almost like one part of this chain. It's them who take them for it.
why is it skewed in the UK, and how is it skewed?
Well, it's skewed towards the cinemas being able to get a heftier share of that revenue that's coming in from the sales. It's something that quite a few of them have gone on record, and this one particularly is an independent. So, I mean, as we know in many industries now, if you're an independent, it's a lot harder to go up against some of these like mammoths.
Thank you very much for coming in, Sam. Really appreciate that. Now, coming up after the break, we'll hear from former Chancellor Jeremy Hunt. We are getting some good names in now on the future of the state pension. Very sexy stuff. Don't go away.
This episode is brought to you by Okta. AI agents are everywhere now, quietly making decisions across organisations. That's great until you stop and think, who's in charge?
If you don't know who an agent is, what it's connected to, or what it's allowed to do, you can't really trust it to act in your interests. That's the bit Okta focuses on. They secure the identity of AI agents, so there's one clear layer of control across the whole system.
Which means every agent has a clear identity, permissions, and a line of accountability, even as things scale.
Risk becomes something you manage, not guess at. Secure every agent, secure any agent. Okta secures AI.
Now, Sir Jeremy Hunt has told City AM the state pension triple lock isn't fair on future generations. The former Chancellor conceded we spend more on that than we do on the police, schools, or the entire defence budget. This is what he had to say.
When it was introduced, pensioners were more likely to be below the poverty line than any other group in the population. And we had a real issue with pensioners living in very, very tough conditions. Now pensioners are less likely to be in poverty than any other population group. And let's be clear, I don't want to cut the state pension. In fact, I would like to have a rock-solid guarantee that it will always go up with inflation, so that pensioners never have to worry that the value of their pension will be eroded by price increases.
Why don't we hear that argument more? Because that doesn't sound like... it's a bit like the conversation around the future of the NHS. You either support the NHS as it is and don't want to touch it, or you're somehow in favour of the worst of the US healthcare system. And when it comes to the triple lock, again, it seems like people are too afraid to say, no, I still think pensions should increase at the rate of inflation. They just don't think we need the other mechanisms that sometimes raise it by silly amounts. Why don't we have that sensible conversation?
Well, that's what I'm trying to do. And obviously...
Well, you and I are having a sensible conversation. Where is it in Westminster?
Well, I have some freedom on the backbenches. And my hope is, look, I recognise that both Labour and the Conservatives promised in their manifestos to keep the triple lock. So we're probably going to have it for this Parliament, and I would respect the decision to keep it for this Parliament, given that it was in those manifestos. The question is what happens in the next Parliament, because the savings this Parliament would actually be relatively low, and I hope all the parties will agree not to put it in their manifestos going forward, because, and this is the clinching argument for me, every year that we've had the triple lock, we've had a deficit. So the cost of above inflation rises in the state pension, as opposed to just inflation rises, is partly being funded by debt. Now, how many people would think that it was fair for them to have an above inflation increase in their pension if that was being paid for by more debt on their children and grandchildren? I think most people would recognise that actually isn't fair on future generations. But it's also very bad for economic growth, because we have to pay for that debt through £110 billion a year that the Exchequer pays for debt interest. That's more than we spend on the police, more than we spend on schools, more than we spend on the entire defence budget. And so there's a cost to it. It's a kind of, It's an anchor drag on economic growth. Now, if we want to look after pensioners well, that's not just a generous state pension, it's also having good NHS, good social care system. That needs economic growth. And at the moment, if we keep racking up our debt, we aren't going to have that economic growth.
So on this triple lock point, why don't you use your status as a grandee, you're well-liked, you're respected, you served in different departments. I know you're on good terms with Rachel Reeves. I don't know how long she's going to be the Chancellor for. But my point is, you have some standing in Westminster and in this debate, perhaps to be able to coordinate some sort of formal cross-party consensus that could, in fact, take the sting out of this. This might be well beyond the realms of what's possible in party politics today. But can you imagine a scenario in which the main parties ahead of the next election agreed to a pretty standardised approach to the future of the triple lock, and then it's taken out of the debate in that regard? Is that something that you would look to explore or advocate? Because without unanimous agreement, you're not going to find someone going into the next election saying, vote for us, we're the only party who doesn't support triple lock.
Yes, it's a kind of prisoner's dilemma for politicians. Well, I hope I can provoke those kind of discussions. And, if it isn't that, could we perhaps set up a royal commission to look into the entire affordability of our pension system, not just the state pension, but what we can do to encourage people to save more for themselves over their working life?
And finally, this week, London has been home to the South by Southwest conference, a festival spanning pretty broadly from tech to arts and culture, with everyone from Gillian Anderson to Michelle Obama. But our tech reporter, Saskia Koopman, has scored a pretty wild interview with Sir Martin Sorrell, the founder of the advertising giant WPP. And I promise I'm not putting words in his mouth when I say that he called for the chief executive but one, who recently departed, should be hung, drawn and quartered. Saskia, you heard these words. Can you talk to us about them?
I did. So Martin Sorrell, who worked and built WPP for over 30 years, hasn't been shy about criticising kind of what's happened since he's left. And he called WPP catatonic. He said it was a bust of a flush. And as you said, he criticised Mark Reed, who is now the ex-CEO. In his view, he basically thinks the company has gone too far to be, saved in any way. And that if he was running it, he also said that he would break it up. Also, interestingly, this week, Goldman Sachs, who's literally paid by WPP to represent it, told investors to sell the stock, which is not great.
Oh, Christ. So, for those who maybe aren't super familiar with the last few years of WPP, why has it gone so wrong? What's been going on?
I think AI has a big part to spend in that. I mean, a lot of their customers are big techs who are all putting their money in infrastructure, and so ad spend in general in these businesses has just completely plummeted. And
I mean, I'm looking at their share price year to date. It's down nearly 20%.
It was no one's stock pick, was it, at the end of last year?
Over the last 5 years, it's down 72.8%, which is, I'm no mathematician, but it sounds like a lot.
Can I just say that it's quite ironic for Sir Martin Sorrell to say these words when S4 Capital, his now company, is down 97% since its highs of 2021.
Wow. That's a long time ago. What I find really interesting about this is obviously you do get stories both in the worlds of, and interviews in the worlds of business and politics, where people seem to be sort of backseat driving when it comes to their successes. But it's another thing to say, like, if I was driver, I would crash the car. Like, I would just wind down the company if I was in charge. I think I kind of admire that.
I also think it's important to note that, no one really knows why he left. There was kind of rumours about the reason why he left, and it was misconduct and things like that, and he never kind of disclosed exactly why he left. So I think there's a bit of unfinished business, or just
he's a rare breed of CEO these days, I find. I've met him a couple of times, and he obviously has a bit of a reputation for being slightly old school in some ways, but having a sort of loud, outspoken CEO who says it how he sees it is rarer and rarer these days. And the amount of I've probably booked thousands of CEO interviews over the years, and very rarely do you have someone who would say something like this. Now, hung, drawn, and quartered, is that responsible language? That's not for me to decide.
It's not filtered through a PR in any way.
No, but he has. He rarely actually really comes out sort of all guns blazing about WPP. And whenever I've met him, I've asked him about it, and he's very cagey about it normally. So it's really interesting. It is a big get, actually, this interview.
Maybe he's just got to the point in his life, bless him, that he just doesn't.
But he's got to the point in the company's life where he's like, actually, I'm sort of done defending this.
Exactly.
It's a pretty poor.
And by the way, we should say, I know a lot of people who work at WPP, and a lot of them are worried about jobs. There are a lot of redundancies going on. A friend of mine has just left an agency, and they wanted an HR thing dealt with, and found their HR department had been deleted overnight. And now their HR department lays somewhere else in a different agency within this massive umbrella. So there are a lot of jobs at stake. And I mean, for what it's worth, I reckon they're probably going to break it up and sell off bits and pieces, right?
He was slightly nicer about Cindy Rose, who is now the CEO, but he quoted Warren Buffett saying, when good management meets a bad business, the bad business always wins.
Oh, that's quite bleak.
That's the nicest thing he's ever said.
That's the thing he probably said all day, including to me, actually.
It is quite interesting as well, just the sort of like the question of tone, because obviously we've spent quite a lot of the last couple of weeks talking about BP and like the Albert Manifold story, and because a lot of that seems to have come down to sort of an old school tone and a sort of say it how it is, and I do wonder where we're going to land on that, like what the sort of future settlement is going to be, what the future corporate culture is, because the economic reality for these companies is going to get really awful, and I wonder whether the sort of the luxury of sort of softer comms is a luxury of days gone by.
And I don't know whether criticising from a glass house is helping.
No, who knows? But and AI, like you say, is having a massive effect on this. I do wonder actually whether the AI headwinds that these creative PR advertising agencies are coming up against, I do wonder if that's going to loosen a little as people realise that actually, like we had Christian May in the studio earlier railing against AI written op-eds. I wonder if people are going to realise, if shareholders and private equity groups are going to realise, actually, you do need a kind of creative human input into this. So I do wonder whether those fortunes are going to turn around. But on the subject of kind of more old school CEOs, I think a lot of those sorts of people have an iron grip on their company, and then as soon as when it starts, and then when it grows and becomes, James Watt had the same problem, right? He built this juggernaut, and it got almost sort of too big, and he wasn't the right personality for it anymore, and he stepped away. And now he's starting his next beer thing. By the way, James, you're more than welcome on the podcast. I wonder if
as we go around this next lap.
But I wonder if the same thing is true for someone like Sir Martin, who sort of started WPP. It kind of became this massive thing, and maybe he wasn't the right.
And I guess he's
personality.
positioned S4 as a kind of digital first alternative, but obviously the numbers speak for themselves, and that's not really working out for him. And so maybe he's just a bit, upset about it. It's just bitter, maybe.
I think that's about all we have time for. So purely for time reasons, we've got to kick you out of here. But thank you very much for joining us. I'm sure
Steve Deneen's banging the door down.
Thank you for having me.
Chat again very soon. Thank you.
Thanks.
Well, Matt, as you say, that's just about all we have time for today. Thank you very much for listening to Business as Usual, proudly brought to you by Okta.
Don't forget to subscribe to City AM's daily and weekly newsletters, and of course, don't forget to download our free app.
It even has puzzles now, which our chief executive told us today more and more people are playing. So that's fantastic. We'll be back in your podcast feeds on Tuesday at 6 a.m. But for now, bye-bye.
Goodbye.